And we are live. Good morning on your TV screens there in Texas and Louisiana. We're on the Smart Money Culture TV network, as well as welcome from around the world as we're streaming on LinkedIn, YouTube, X, and and a bunch more. Anyway, it is we have a great show ahead of us today. We have Ralph Benko. Ralph Benko, I met at the GBA conference just last week, the Government Blockchain Association conference. He is an esteemed guest. I'm really excited about seeing him. As well, we have Ian Grigg, and Ian Grigg is one of he is the inventor of the accordion contract, and the accordion contract is for all. I mean, we'll hear it from him, but it looks to me like the predecessor of the smart contract, as well as he was involved in a lot of the early days of Bitcoin. So very interesting conversation from both of these gentlemen. Of course, we have the great Matt Dixon as well joining us per the usual, and he will be sharing with us the different insights of the markets. All markets are up right now, so that, unless you're short, which I don't think you should be. I said yesterday, it looks like everything's ready to bounce. Everything is up. Oil's up. The U.S. dollar is flat. Now that could indicate a slide that is about to happen. We'll see. We'll have a little bit more insight into that as we move forward. But that steadiness of the dollar, as well as some other factors, have played into this run that we have going on here on the markets. We have one of the things that we're going to talk about today as well is the history of money. You know, I talk about the history of the U.S. money quite a bit in our different shows, but it will be interesting to hear what Ralph Benko has to say about the history of money, and see what that has to say. Now, as well, we're going to have the history of Bitcoin with Ian Grigg and the history of smart contracts. So pretty excited about that. I can join here. I'm just passing around our link for our guests, which I'm super excited about. Let me just make sure I have that here. Ralph Benko. Well, I thought I emailed from him. Anyway, let me send that over to him. Okay. I think I did that. I emailed as well. Well, we are on live TV. We're on live TV. It's always more interesting, too. I'll tell you what, I've said it before, and I have said it. I'll say it again. I do think that Trump is, and I said this at in Sarasota, speaking at Bitcoin Ben's event. I think that Trump is probably going to win, and they're just not going to let him do anything. I think that's the play. I think Trump's going to win, and he won't be able to do anything. We do have a bit of it feels like a bit of a pause in hostilities around the world, which I think is playing in as well. So I see now I have Ralph Benko has joined backstage. I'm going to bring him on for his segment. The great Ralph Benko. Ralph is let me give your accolades here. There's quite a bunch of accolades.
Too many. Don't bore your audience with
well, no, there's some cool stuff here. He was one of the 23 official witnesses before the Gold Commission, and the only one who testified for gold. He was a lead editor of one of the esteemed translations of Copernicus's essay of money, and we'll go into that a bit more. He has served in 3 White House
I've served in one and with two. I served as Deputy General Counsel to the Executive Office of the President of Ronald Reagan, a great honor, fascinating. I was one of three lead field organizers, including in Texas, for President George W. Bush's building of an underground railroad to rescue human trafficking victims. And I worked with Vice President Pence in his role as chairman of the National Space Council to get my dear old friend Buzz Aldrin ensconced onto the National Space Council under the Trump administration. So
amazing. Well,
in one and with two.
Well, I know we could go on about a lot of it. We did some stuff with some of the space guys. Buzz, we were trying to get Buzz there, but of course he's very hard to get. So we are here. We're going to talk about some of the history of money. I spent some time reading over some of your work. I would say a lot of your work, but there's a lot of work out there.
There's millions of words. Just
I didn't make much of a
byline. Run the other way. I'm a promiscuous writer.
So tell me a little bit about. I guess we gave a little bit of an introduction of yourself. If you want to give a little bit more, that's fine. But let's just dive in. We have about a 10-minute segment here on the history of money.
Right. Well, first of all, what is money? Okay, and that's not a rhetorical question, Bruce. There was an economist who was very famous in his day called Jevons, and he was the guy who defined money. Money has essentially he had four characteristics. It's been consolidated into three, and that is medium of exchange, unit of account, and store of value. That is what defines moneyness. And by the way, money was essentially invented by scientists, not by economists. Economists study money, but Copernicus and Newton and Josephson were the guys who basically said, here's how to make, and I mean that in a highly literalistic version, here's how you make money. Literally, with Isaac Newton, when he wasn't busy inventing, gravity and having apples fall on his head and whatnot, he was the master of the Royal Mint in Great Britain, and he was attempting to restore the silver standard, but in his famous paper doing that, he accidentally overvalued silver to gold a little bit, driving all the silver off to Europe and putting England and then the world onto the gold standard. You have Sir Isaac Newton to thank for that. You can actually go Google that if you want to go to the Royal Mint of Great Britain, and they won't tell you. They won't admit to the fact that it was a mistake. Let's not call it a mistake. Let's call it a happy accident. And I'm a big gold standard. I'm sort of one of the last five gold standard advocates in the world. So we're a majority of five. Unfortunately,
I mean, it's crazy, and that was one of the first things. So when Ralph and we connected at Brock Pierce's house, actually, or mansion, whatever you want to call that place. It's a very nice place.
I call it the Brock Pierce Home for Wayward Boys and Girls in Washington.
Right, we fit right in, and we start talking about money. We look at each other. We're like, okay, we're gonna follow up on this.
Yeah, and we're letting your viewers in on some on some secrets.
Yes.
Open secrets. Yes.
Well, it is really so important. And, I think a lot of the people right now, they feel the inflation so much. I mean, the average person feels the inflation so much. We talk about it quite a bit. The average household is having to pay 15-20% more this year than last year. And that's a lot for most people. What's going on?
Thank you, Donald Trump. Yes, that's exactly right. Donald Trump, I do a weekly column for Newsmax, and for people who want to, piggyback on my research, Donald Trump was absolutely ferocious in hippie punching Jay Powell, the head of the Fed, to depreciate the dollar, to make the dollar weaker. He's still fighting to make the dollar weaker, and he's made it very clear that if he gets reelected, one of the things he will be focusing his energy on is making the dollar weaker. Milton Friedman and I disagreed about the gold standard. He was very mean to the gold standard, but he proved that inflation is always and everywhere a monetary phenomena, and it takes about a year to 2 years before when you sink the dollar for it to bubble up into the CPI or the inflation index. So sure enough, Trump was bashing Powell. The Fed chairman always does eventually what the president tells him to, even though it's nominally independent. But if you look at the history, it's not correlation, it's causation. And if the president is pushing for sinking the dollar, the Fed will eventually do whatever he says. And then a year and a half later, we began to see inflation tick up. Joe Biden, and by the way, I voted for, full confession, I voted for neither Trump nor Clinton nor Biden. So I'm not speaking here as a partisan, but Joe Biden did the right thing and gave Jay Powell the authority to tighten, thereby bringing inflation down from 9% to 3%, which was very, very impressive. It didn't reverse it. It didn't put us into inflation.
So wait, hold on a second here. So your stance is that we took the inflation down. And then I would say I would agree with the fact that
Biden took the inflation rate down. There's no question that the inflation rate came down under Biden. Whether you want to give him credit for it or not, that's up to you. But
so why is inflation up then so much across the board for insurance, for cost of food, for rent, for I would actually say that the inflation numbers are probably pretty cooked.
No, the price increases that we experienced under the Trump rubbishing of the dollar have not come down. Price increases have not come down. That would be called deflation. Okay, prices are now going up much, much slower, 3% a year instead of 9% a year, close to the Fed's standard target of 2% a year. And that doesn't bring prices down, though. If you did that, you would get deflation. If you got deflation is the number one cause of recession. You don't.
Well, I mean, prices going down would be nice, but I'm not saying the prices are going down or that, but they're going up much more. I have experienced. I mean, I know my family. Even let's talk about private school. I mean, everything went up. Everything a lot.
Yes,
a lot.
That's whenever you sound like Donald Trump. A lot. And you've been
a lot.
They're huge. Right.
I was the best.
No, I'm kidding. Yeah. So I'm just saying inflation means when the price index goes up. So the average, the prices of everything on balance go up. Okay. When you have something spiking, like the cost of rent, and other things either stable or going down, that's not inflation. Okay. Inflation is when you have a general rise in the price level, and the general rise the general rise in the price level comes from making the cheapening the dollar. Cheapening the dollar means that prices go up. They're now going up at 3% a year instead of 9% a year. It's unequivocal. Yes, the prices are still high, and as a legacy thing, and some prices are higher than others. When I go to the grocery store, I go, wow, these eggs should be made of gold. These eggs should be delivered on a lower platter.
50%. So I don't want to talk too much. We have a short segment. We'll have to have you on again, but maybe dip in a little bit more about the history of money. We have a few more minutes left here.
Okay. Well, look, the most important thing that we as Americans need to know is that when the Constitution was written, you can read the debates in the Constitutional Convention of 1787. James Madison took shorthand notes and then went back to his rooming house and recopied them out in longhand. And it's about 250,000 words of the debates that the actual founders had discussing what should and should not go in the Constitution. They were adamant against paper money, which they called notes or whatever it was. I don't have it open in front of me. They wanted gold and silver as the money of the United States. And eventually devolved, that was called bimetallism. And by the way, The Wizard of Oz is a parable. In the original book, Dorothy was wearing silver slippers, not ruby slippers, on the yellow brick road, which stood for gold and silver. And William Jennings Bryan, you shall not crucify mankind upon a cross of gold. There was a big fight, which Bryan lost, and McKinley won. We got the Gold Standard Act of 1900. But my point here, to cut to the chase, America prospered and thrived on the gold standard. Okay, it devolved from bimetallism to the gold standard, and we saw economic growth over the 150 years before it began to decay under FDR, and then Nixon put it to sleep. That America just thrived like it was nobody's business. If you get 4% economic growth a year, which we did, we supply-siders, we created that under immense ridicule, and we supply-siders were pro-gold standard. We didn't do it that way. We had Paul Volcker tighten the money supply instead. Reagan did. But the point here is the gold standard is wonderful for equitable prosperity, for economic growth, and for economic growth across the board, not just for the ultra elite. And
well, I absolutely agree with you there. What I want to do is let's Matt, feel free.
You laughing at me, Porter? You laughing at me?
No, Matt Dixon, who runs, he does all of our charting and everything else. I pull him on right here. He says this is pretty interesting. Let's continue. It is a short segment. But if you're around, and I can call you over the weekend, but let's continue on Mondays if that works for you.
I don't know. I have to check my calendar, but check in on me over the weekend. Thank you for having me on. And if I'm free on Monday, all yours.
Awesome. Yeah, hi Ralph. Ralph, good to see you. Matt here. Yeah. I was just saying to Bruce, this was fascinating, really interesting stuff. So I enjoyed listening to your, everything you had to say. Absolutely fascinating. And
okay. Well, for geeks like you, Matt, go to HackerNoon, HackerNoon.com. Look up Ralph Benko and look up the history of money. I've got a lovely little article there, sort of detailing it from 500 years ago until right through cryptocurrency. So if you're crazy enough like me to like that sort of stuff, go to HackerNoon, check it out.
I've been through it all, and it is interesting. That's why I love hearing it over and over. It's good stuff.
Thank you, Bruce. Amazing. Thank you, Matt. I hope to see you again soon.
Thank you, Ralph. Good morning, and we'll see you soon. Cheers.
See you soon. Bye.
All right. Well, there you go. It's amazing. I got it. Hats off again to the Government Blockchain Association for putting such a high caliber of people together, because it was a lot of fun, and I can't wait for the next one. It's taken, it takes a long time to build things, and they've been building it for a long time. But hats off again to Gerard, Dashe, and Kathy. I know we're going to move right along here. We're looking at the DXY, the US dollar. That's what I said on the thing. Dollar's flat. Everything else is flying.
Yeah, so it is. It's been an interesting day. Looking at gold especially, we'll have a look at that. But I just wanted to touch on this once again. We're right in the middle right at the moment. So you can see previous highs and lows. We've actually followed pretty well a parallel channel right back from the financial crash of 2008, which is actually quite amazing. The dollar index has really held pretty well, almost entirely within this channel. So the channel is definitely providing boundaries for price. But what's really interesting is that whenever we see a high in the US dollar, it tends to coincide with a low in stock markets or Bitcoin. So for example, we saw the stock market bottom right back in 08, obviously with the financial crash. But again, we saw Bitcoin here, $800, which was a low, and then it exploded higher to 20,000 back in 2018. And then we saw the dollar rising, and we saw then the collapse, and that's the COVID collapse actually, where we saw the dollar rising. We saw the Bitcoin low, 3,800. Then we saw dollar declining, and we saw a high again in Bitcoin. That was the 69,000 previous all-time high. And then we ran basically right down into the FTX crisis, where we saw Bitcoin down at 15,500. And then after that crisis, we then saw dollar start to decline. And that's what's taken us now to Bitcoin new all-time high with the dollar declining. So as dollar declines, Bitcoin tends to appreciate. So we're pretty close to the middle of the parallel channel right now. And obviously, it can continue sideways, but it's likely, as in previous times, at some point to head towards the upper or lower boundary of the channel. And if we think about where the economy is at the moment, I think, and I said this yesterday, that we've got CPI coming out next week. We've got PPI and CPI, measures of inflation in the US, which are absolutely key to the value of the dollar. Because if inflation is elevated, it basically means interest rates will stay high, to try to slow the economy and to slow the inflation and bring it down. But if we do see some weaker inflation numbers, CPI numbers in particular, then that will allow the Fed to start to potentially reduce interest rates. And I think that's what Ralph was talking about. I'll have to have a closer look at the information that he said. But basically, if we see lower interest rates coming, if we see lower CPI, then the Fed will be allowed to reduce interest rates. That will mean that the DXY will fall to the bottom, towards the bottom of this channel. And that should mean an amazing rally in risk assets, including Bitcoin. So that's the ideal scenario. Right now, things are a little bit choppy. We'll look at this slightly shorter term. This is the weekly chart. We'll just go into the 4-hour chart just to see what we're doing actually right at the moment on the dollar index. So just expanding it out a bit so you can actually see where we're at there. So we appear to have had, well, it's actually choppy. It's still, to be fair, it's actually within the middle of the channel. So all this blue background is because we're in the middle of that channel we just mentioned, that long-term price channel. But this actually looks quite corrective to the downside. So for me, it doesn't look as though we're going to be heading dramatically to the downside. We may well still continue with some choppiness, but this could be an ABC making up a larger W wave. This could be some kind of X wave, which can continue sideways and down. So that could be quite supportive of crypto and Bitcoin. But at some point, whether it's from here or possibly from down here somewhere, maybe not that low, but I think we may see a bit lower yet on dollar index and then push higher again. So I think we're set for probably, as I said yesterday, a rally in Bitcoin. I'm going to jump straight over to Bitcoin because it's fascinating, the chart here. Again, I'll just
mighty Bitcoin.
Yeah, it's so I can measure this. I can label this basically sideways movement. This is the previous all-time high here, 73.8-ish on Bitcoin. That's around this area here, there. That's the all-time high for Bitcoin. And that was basically following, obviously, the ETF approval. And we got this nice rally in Bitcoin, take us to new all-time highs. Since that time, we've been choppy sideways. Now, I've got it labeled here as an A, B, C, D, E triangle, and that is a valid possibility. I don't actually like the size of the overshoot here because it's allowed to overshoot a little bit, but this is quite substantial overshoot of this channel, this supporting channel. So the triangle is a possibility, and from a triangle, we'd then get a terminal thrust to the upside. But the reason I'm showing you an alternative here is because the long-term outlook may be very different. So if this is indeed a triangle, it's a pre-terminal wave, and this would be a terminal wave to the upside in 5 waves. It would still go in this sort of pattern to brand new all-time highs, be amazing for Bitcoin. But following a new all-time high somewhere up here, maybe 84-ish, who knows, we would then get a very substantial correction. But there could be another way to label this. It all depends on which cycle you're looking at as well. But basically, we would still get a substantial correction if this is indeed a triangle. But it could also be a W, which is 3 waves down, X, 3 waves up, and then Y, 3 waves down. W or X or Y. So if it's a WXY, we would still move up in exactly the same fashion, impulsive fashion to the upside, 1, 2, 3, 4, 5. And wave 3 would take us to a minimum, I believe, of 1.618 times wave 1. So wave 1 is measured from the E wave here to the top of this move. That's wave 1. Then we've got wave 2 down, appears to be complete now. And wave 3 would take us to minimum 1.618. The next one above that would be that level I've told you about, 2.618 is 84,000. That actually has a number of confluences with other Elliott wave extensions. So I think 84 is quite an interesting level. So it wouldn't surprise me that we see, if we were to see softer CPI, that we do see a really good rally on Bitcoin, and probably most likely because crypto is, after all, a really volatile asset, emerging asset, still volatile. Even Bitcoin is still highly volatile. Wouldn't surprise me in the slightest to go straight through 1.618 to the 2.618 as the next stopping point. And that's still, if that was a wave 3, if I move that to there, if that was the wave 3 here instead, then we still would have we would still have a small wave 4, probably smaller than that, but some kind of wave 4, and then a wave 5 to brand new highs again above that. So either way, things are looking quite positive, whichever way you want to count this, whether you count it as a triangle or you count it as WXY, they're both corrections. The only difference, real difference for me right now, is the triangle would mean this is a terminal wave, so we get a fairly substantial correction after it. But if it's WXY, it may not be a terminal wave, and we can potentially go quite a bit higher. So I think Bitcoin is looking great. As we said on previous shows, there was a really good entry point. We thought this, if it's an E wave, or even if it's a Y wave, makes no difference. We've got 5 waves up from there, and there's beautiful Fibonacci relationships within that 5-wave move. So I think it's pretty well confirmed that we've moved up in 5 waves quite nicely here. You can see 1 up in blue, 2 down in blue, 3 up in blue, 4 down in blue, 5 up in blue, making a larger wave 1. Then ABC down in wave 2. And now you can see this is quite impulsive. Look at these green candles. Bit of choppiness now, maybe a little wave 2 perhaps. So even if it's wave 3 itself will be made up of 1, 2, 3, 4, 5 as well. So this is looking impulsive to the upside. We were saying, when we already saw this moving up here, that this was likely the thrust from the triangle. We were going to get wave 1, and that was perfectly delineated with the Elliott wave pattern and the Fibonacci extension measurements within it, and then wave 2. So we've had loads of opportunities to go long here on Bitcoin, and even from retesting this trend line, we could have gone long on the trend line, stop loss a little bit below, and now we've moved up into substantial profits, and now we can protect at break even. So no matter what happens with Bitcoin price now, you're guaranteed not to make a loss if you followed those rules. And now you're in decent profit with the potential to go to minimum, as we said, 1.618. And that's just for wave 3, likely 2.618, which is 84,000. I think the outlook for Bitcoin is really, really good. So I think that we are going to see weak CPI. And it's kind of, we don't know what the data is, but actually we're looking at the wave structure of the asset, Bitcoin, which is a very, very important asset these days. We're looking at the wave structure, and from that, I think that we can deduce what the likely outcome is going to be for the CPI news. So hold me to it. Tell me if I'm wrong, but also please tell me if I'm right. CPI is going to come out a bit softer than expected, I believe, because I think we're on for a really good pump in the prices. So that's Bitcoin. And I won't go back to it now. It's taking time to switch, but we're right in the middle, by the way, on RSI. So telling us there's still loads of room. In fact, I will switch back to it just to show us. See, we're right here in the middle of on the middle with the RSI. There's loads of room to go to overbought, and it can go well into overbought territory as well. So there's loads and loads of room for movement up here. So the price is not stretched at all. Technically, it's not stretched. So there's really plenty of opportunity and room for Bitcoin to go up in price. So as I say, we'll step back and just have a look at gold, which has been, look at that, Bruce.
Oh my gosh, it's like, holy smokes. Look at that so green, those, what do you call them? Green shoots, green candles, I call them. Look at that. Yeah, that is impulsive move.
Yeah, certainly green shoots. Yeah, green shoots, green candles, whatever. So again, we've always said this is a corrective move down because it's choppy and overlapping. So this movement up here overlaps this movement down here, and so on. There's overlap all the way, basically. So it was very clear this was just a correction down. That's why we labeled it right from the beginning. We're saying this is A, B, C, down. We couldn't tell precisely where the C wave's going to end. It could have been a bit lower. It could have been here. But we knew it's a correction. So when you know, very, very confident, high probability, sort of 95%, this was just a corrective move down, we could enter long anywhere around this sort of area, consolidation area here. And now, again, we're massively in profit. You can protect break even or even a small profit. So you're guaranteed now, no matter what happens in the world, you could be guaranteed a profit. And that's the way you need to ideally do these trades. It means very often you don't get big profits out of it, because if the price does move down, you just come out with break even or a tiny profit. But if it does move up, and can continue to move up. And if this is ABC down, we should move up to brand new all-time highs above this 2,430 odd that we had previously. So this is, this is really good. Really,
shameless
really
plug right now. Go to @costmetals, @costmetals.com, and sign up. You can buy gold, silver, platinum, and palladium at cost there. Use clubs with an S referral code. And then as well, if you're trading, guys, and you want to trade, if you watch the show and you want to start trading, go to learnhowtotrade.club. And this is on a banner down the bottom here. Learnhowtotrade.club, discount code TradeSmart10 for your discount there. And start trading with the great Matt Dixon.
Yeah, and also, of course, follow us on eBay.io, because you can get access to our ratings there, which are AI-powered ratings. Very, very powerful portfolio building tools will really help you with your trading, and I'm happy to engage with people as well on my Twitter or X account at MDTrade. I'll always answer any queries that come my way and try to help people navigate this crazy trading world. I say crazy, but it can be really exciting. So gold is looking great there. We see oil is also, and we've always said, by the way, there's a good correlation between oil and gold. I've known this. I used to trade oil and gold many, many years ago, specifically oil and gold, and there was a great correlation between them. So we see that once again. We saw the pump in gold, getting a similar pump in oil. And again, it appears to be a corrective move down. We did say again the other day that the 100% was a potential target for oil on the downside, but we did also say that previous pivot points, and this you can see as a pivot point where basically price was a pivot where we got an ABC down and then higher. So basically you can see that pivot there. I said that would be support. The next support is back here. So this would be a good potential support level, and just look at price. It came down, virtually tagged that pivot point, and then moved up sharply. So again, all these little tips and trading tools can be used to, the more you get in your favor, the better, of course. The more confirmation you get for any particular decision, the better it is. So yeah, it looks as though we're potentially going to be heading higher in oil. So whether that's, I know things are calm at the moment on the geopolitical front, but nothing ever seems to stay calm for long. So let's keep our eye on that.
Bunch of actors. They're a bunch of actors. I always say Washington, D.C. is like Hollywood for ugly people.
Yeah. So here's SPX, the S&P 500. Again, we've been saying for some time, this looks like it's corrected down. And it's looking as though we were, I've said for some time, I think I've got a target somewhere here. I've got a target, minimum target up here, 5379. I've actually had that on the charts for ages, saying that's a likely minimum target. And you can see we've actually moved up quite substantially from the retracement we had, a 38.2% retracement of the expected move. That's pretty well where we tagged, and then we're moving up quite nicely, excuse me. So SPX is looking positive. So SPX is very typical of a risk asset. So just going back to Bitcoin again, and no, it wasn't Bitcoin actually, it was DXY, wasn't it? Just looking at the halving events in the long term. So I probably have to go to the weekly again for that. You can see I've got the halving events are actually the red lines we've got drawn in there. So probably worth just having a quick look, because I hear so much what I think is rubbish personally about these halving events having an impact on price. They're predictive, and what happened this time, last time, etc. Well, here's the first halving event. We got a bit of a move up in dollar index, then a move down. Don't forget, Bitcoin is inversely correlated, so you get the same sort of move in the opposite direction with Bitcoin. So that halving event, basically we got Bitcoin selling off before it then appreciated a bit. From this halving event, we actually got Bitcoin pumping a bit before, we got Bitcoin, falling before pumping to the downside when it exploded to 20 odd thousand. So there's initially a bit of a Bitcoin fall away there as dollar index increased. So that was that. This one, we got massive fall away in dollar index, which meant a pump in Bitcoin. So from this halving, we got a massive pump in Bitcoin. From this halving, we got a dump in Bitcoin. From this halving, we got a bit of a dump in Bitcoin. So there's no consistency there. It's only 4 events. And actually, I was talking with somebody the other day about gambling odds. This is somebody who's involved in gambling business, and he said he's seen people do sort of 15 in a row, tossing a coin 15 in a row. Well, I've actually seen, and I actually won a bet actually with 8 coin tosses in a row. And the odds there are 1 in 256 chance of that happening. So here we are just talking about 4 events. To actually deduce a particular trend from 4 events is utterly ridiculous. From a scientific perspective or a gambling perspective, probability perspective, it makes no sense whatsoever. So you cannot deduce anything from halving events. All you can say is that long term it's great for Bitcoin because it means diminishing supply and limited supply at the end of the day. So long term is great, short term you can't deduce anything from it. And in fact, the markets price these things in way in advance. It's other things that drive prices like CPI, like geopolitical issues, like interest rates. These are what drive prices short term. So just going across the markets, we're seeing some great movement here for Solana. I'm just trying to keep an eye on the time as well while we're here, because I know we haven't got that long. But yeah, Solana is showing some great activity here. I could be, it could be that we have the movement complete down here as an ABC, some kind of ABC move. It could have been complete here already, and we could already be moving up impulsively. From the look of Bitcoin, I think we are probably actually just going to move straight to the upside. I think things are looking bullish right now. So, yeah, I think Bitcoin is showing us the way. That all the fundamentals are behind Bitcoin, all the new interest in ordinals and runes and everything. Everything is looking positive, except for with Bruce's Dogecoin. Doggy, it's down today.
Impossible.
I know it's impossible, but it's happened. So yeah, whatever's impossible is going to happen sometime, because probabilities always work out at the end of the day. At the end of the day. So yeah, the meme coins are a mixed bunch today. We've got Book of Memes is actually up 2%. Shiba Inu is down 0.38, and so there's a bit of a mixture there. Litecoin has been quite a good performer of late. And again, we've got minimum targets for Litecoin here of 1 times this movement up here. If we do 1 times here, minimum target $92 for Litecoin. That'll be a minimum. We can easily go to the 1.618, which would be $103. And that's probably my preference. If we see a pump in Bitcoin, as I'm hoping and expecting, to new all-time highs, I'm quite sure Litecoin is going to be dragged up with it. And you never know, in the long run, maybe it'll meet Bruce's real long-term target. But it's going to be a windy road on the way. Nothing ever goes in a straight line. But Bitcoin has done really well, hasn't it? From its 56,000 low here, and we were predicting it was going to bounce, and we're at 63,000 now. So yeah, a really good percentage, well more than 10% in a very short period of time. XRP, a bit of a laggard. Anyway, I think I'm actually feeling that my time's run away with me, hasn't it? So
yeah, well, we want Ian Grigg. It's going to be another interesting show, action-packed show today. And Ian Grigg is he's the inventor of the accordion contract, which is, by the looks of it, the predecessor to the smart contract. He's been involved in a lot of things. So excited to have him on.
Yeah, just finally, I noticed, by the way, that Toncoin was actually featured yesterday. It's in the top 30 on the eBay efficient portfolio. So there's a top 30 cryptos there, and it's within that top 30 portfolio. So Toncoin is a great one. We featured that one yesterday, discussed a little bit about it. It seems really, really promising. And
awesome.
Yeah, look at the pump on Ton, 8.7%.
It's huge.
We featured it yesterday. We said it's set to pump. We
That's
saw
what
the ABC.
That's what pumped it.
Maybe.
I helped, I'm sure.
This just shows what we're giving is tradable, actionable advice. I mean, honestly, we gave a full feature yesterday on Toncoin, saying how amazing it was, saying the wave pattern looked good, and just look at it. Amazing.
Awesome. All right, I'm going to bring on. Yeah, I'm going to bring on Ian now. Ian Grigg is the great Ian Grigg, right? The infamous Ian Grigg. He was, as I mentioned, the inventor of the accordion contract. He's been quite a historical guy in the space. How are you, Ian?
Hi there. Glad to be here.
Yeah. So, tell us a little bit about what you're working on right now. And I mean, the recording contract. It was a long time ago, but how has that played into what you're working on?
Right now, I'm working on a couple of things. The first is software to do social savings, which is where you have a group of people come together to do savings in common, sort of like a mini cooperative financial institution. And that involves basically using a mini form of blockchain to give them an accounting mechanism such that they can do their accounting more efficiently and with more reliability. That's one thing. The second thing is something we call hover trusts, which is taking the notion of the trust as a 1,000-year-old mechanism in law to solve for the regulatory tsunami that's hitting crypto at the moment. The basic idea is to stick your assets into a trust. Everybody gets a trust, and that establishes a higher level of governance for the looking after of the assets, which is one of the problems that's been bedeviling all of those crypto exchanges out there, not knowing how to do it, not knowing what to do, what's the standard, et cetera, et cetera. This is all solved by using a trust. The other thing is it establishes the jurisdiction as being where the trust is. According to international trust law, the important jurisdiction is where the trust is, and the beneficiary of the trust doesn't really matter. They're not important, they're not germane. So consequently, when you've got this to and fro, this piggy in the middle problem where you're trying to get access to your crypto and so forth and so on, regulators take a sort of double dip at the regulation. They say, well, where's the exchange? Where's the person, et cetera, et cetera. This all brings it down to one jurisdiction. So you don't have two jurisdictions or three or 180 jurisdictions all fighting to regulate the same activity. You get one jurisdiction, one regulator, one set of assets, and life becomes simpler. So we don't get that to and fro, that fight that's going on between countries. So that's what I'm working on at the moment. Those two things.
Interesting. Okay, so let's talk a little bit about what brought you here. What were you? What was the inspiration for the recording and contract, and how do you see that now playing into Bitcoin?
Yes. What happened there was in 1995 when I got into this field, which now we call blockchain and Bitcoin and so forth. I decided to start with bonds and research bonds deeply. Everything I could read on it. It was a pretty boring topic. But one thing I did discover was that a bond is simply a contract. So after a lot of toing and froing and thinking about databases and so forth, the technology about how you describe a bond, I came to the conclusion that the only way to describe a bond is by dealing with the contract, by describing the contract. So I came up with this textual form whereby we would capture the written version of the contract, throw in some parameters which were readable by my program, and that would allow the program to display the bond with the appropriate headline things, such as the maturity, the interest rates, the coupons, and all that sort of stuff, just by using some parameters. But then the rest of the document would have all of the writings of the lawyers in there, unfiltered, to be interpreted by the users. So that form, once signed with a digital signature, then allowed us to document and solidly link that document to every transaction that came along. So we had the situation where every transaction carried the hash of the Ricardian contract, which allowed us to write software to dive into any transaction, pull out that hash, index back to the contract, read all the parameters out, and say, this is precisely what's going on. So that was basically the writings of the contract. And it worked. I don't see another way to do it after 20, 30 years that it's been. So where it comes to Bitcoin is that Bitcoin didn't use any form of contract. And that was a bit unfortunate. But you can kind of rationalize that in the sense that Bitcoin was the one. It was the blockchain. It was the only thing there. So therefore, the unit in it didn't need to be described. But as soon as you added another blockchain, another coin, another token, they had to be described because they were different to Bitcoin. So what should have happened was that things like Ethereum should have used a form of contract to describe what it was that the Ethereum unit is. And this is, of course, where you get into a mess with the regulatory proposals that go on. They say, well, it's a security, blah, blah, blah. A security really is a contract, in the sense that you should have written down your terms and conditions and what you're offering to the user. And if you haven't done that, you're in a bit of a mess, because then the courts can find whatever they like out of the things you talk about, your videos, your presentations, the website, and so forth and so on. You're much better off writing a proper contract and saying, look, this is the contract. Everything else is just fluff. If you don't write the contract down, as Ethereum didn't really do, then you're dealing with fluff. And that's why they're in a bit of a mess now, with some of the regulators turning around and saying, you know what, maybe you are a security.
Yeah, well, and now, of course, with the getting rid of the proof of work, I think that adds more fuel to the fire. So I know you were, I think anyway, you were around in the early days. Can you talk about some of your experience with Bitcoin?
Well, Bitcoin was something that I didn't really like. I hated the proof of work thing. It was a fantastic innovation, great invention. The problem was that the power consumption was uncapped. So consequently, the more work, the more power. I thought that was, that's the sort of thing that I thought would come a cropper at some point. It would fall apart. At some point, there would be a reaction against that in political sense, economic sense, regulatory sense, or whatever. But it didn't happen. It didn't happen. So I guess I was in the room when Satoshi was first talking about the process. I didn't pay much attention. After it got issued, it started up in 2009. Was it January the 6th? He released the working version. Every few months, people would write to me and say, "Did you do this?" And I thought, no, I would never do something like that. But eventually, I kind of got comfortable with it, and you have to get comfortable with it eventually. And I think it was a VC round in like 2013 where people were talking about it backwards and forwards, and eventually I convinced myself, yeah, well, this is here to stay. It works, it's running. There's no point in grumbling about it anymore. We now have to deal with that. So I guess that's my experience with Bitcoin per se, as the blockchain.
Well, it's quite an experience, for sure. And yeah, I mean, it was. I still, to this day, to me, I can't believe it's like $60-something thousand. I mean, we were. It just is like, oh, I couldn't believe it when it hit 20. Well, actually, when it hit 1,200, I thought, oh my gosh, I was wrong. I shouldn't have sold at 400. It's very upset.
Yes.
And and then of course, when it hit 10, and every time it's gone higher than I thought. It hasn't really gone lower than I thought, to be honest. I would think
there's a huge base. There's a huge base of people which are totally dedicated to it, and they won't let it go lower than the size of that base.
Right.
Whereas the growth is dependent on bringing in new people into the community. So you kind of follow it around. The growth that happened in was it 2017-18 was all due to Asia. People in Asia started to pile in and into Ethereum, which they loved. Whereas other peaks were different groups. So you kind of map the different groups. And now we're trying to think, people are monitoring, okay, which group is coming in now? And you might talk about the American ETFs, you might talk about et cetera, et cetera. But yeah.
Interesting.
It's quite surprising.
It's been fun. It has been really fun.
Yes. And, there's something really odd there. Hal Finney, the guy who's the first person to do a transaction with Satoshi Nakamoto, wrote on the cryptography list saying, now consider the fact that this is worthless at the moment, but in a few years or in some decades, it might go to be worth $1 million.
Right.
So we had this thinking about price right from day zero. It started right in the beginning. So it's a phenomenon.
So you always thought it could go to $1 million?
No, this was Hal Finney writing that it could go to $1 million.
Okay, because I'm actually bullish at seven. I'm actually bullish at seven figures. I wasn't until the whole runes thing and the ordinals, and then you have these people now. They're like just sending off ordinals to old addresses, basically burning Bitcoin Satoshis. And we're going into a deflationary. We're getting to a point where it could be deflationary as well. And you have this whole ecosystem. But now, of course, we have so many of the big guys that have so much of it that it's kind of interesting. So we only have a couple of minutes left. I want to talk a little bit more. I mean, we could shoot, go on and on. We probably have to have you on again, just like the beginning of the show with Ralph Benko. We got to have you on again. Talk a little bit more though about you mentioned this trust structure. Is that something that is packaged together that you're selling, or okay, tell me about that.
Well, you can't really sell trusts. Trusts are a heavily regulated thing. You can't run around and advertise them and so forth and so on. But we have built a system which allows people to enter into an arrangement where kind of you get to do your trading, but you're in a trust, or your assets are sitting in a trust. So you have to go to the trustee and ask for these sort of requests to be handled by the trustee. And what we've done is worked on how to do that at a scale level. So it's very interesting. It solves the problems for the users who don't know where to store their assets. It solves the problems for the regulators who don't know what the law situation is going on here. And it solves the problem for everybody else, really. So we're quite optimistic that this could be very useful to the world.
And when you talk about it, you make it sound like it's like a smart contract or something. Is it, or is it something different?
Oh no, it's not a smart contract per se. It's just
no, not a smart contract. Recording a contract. No, I'm kidding.
Well, it could be a recording contract. Of course,
right.
The software that is on Bitcoin and Ethereum and all those sort of things, they use smart contracts for all the different tokens that are on there, hence your ordinals and so forth. So it uses all that stuff, and it could use recording contracts, and it probably should. We don't as yet use them in that process.
Interesting. So our commercial break starts in about a minute here. So we have a couple more minutes. How do people find you? What's the website? It's Ian Grigg. This is his handle, IANG. I'm like, is this Ian? I was like doing some research last night. Oh yeah, this is him. All right, we got a hot potato here. So tell people how people find you. How do they get in touch with you?
On Twitter, I'm IANG_FC. The company we're talking about is called Hover Trusts, and we have I think LinkedIn, Twitter, and what's the other one? YouTube, and they're all Hover Trusts there, all one word. And we're not actually HOVER TRUSTS.
Okay.
Hover, as in hovering above.
Hover Trust.
Yes.
Got it. Okay.
You'll see the symbol there. It's a little ancient flying UFO.
Saucer.
Flying saucer, that's it.
Well, Ian, thank you so much for coming on. It has been a great show. I know Ralph is still backstage. Ralph, thank you as well. And Matt, but let's have you on again, Ian. I'm super interested in what you're doing and what you have to say.
Sure, anytime.
Thank you again.
All right. Bye-bye.
Cheers. All right, folks, we've done it again. Another great show. We'll see you in a few hours.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.